Hey, Jerry Conti here from Legacy Capital, managing partner, also the fund manager of the Visionary Growth Fund. I am here at Board of Advisors Q4 event. Couldn't be more excited to be here with Jeff Stock. Jeff, welcome to the podcast at BA.
Thank you, Jerry. Nice to be here with you.
Yeah, no, it's fantastic that you're here. And it was great how we met too. You know, we met at an A-Vestor conference, which is a fund manager, fund-to-fund experience. Like we met about 120 fund managers that day. And I it was a first for me, first time ever coming into a room like that. And I thought it was awesome. And then we had a chance to meet. Tell us a little bit about your background. What motivates you? How did you get started in business? Tell us a little bit about your why.
Yeah, that sounds great. So I'd love to tell you about, why I love what I do and why I'm here. So I went to the University of Connecticut and I was really interested in finance and investing. And I participated in a student-managed stock market challenge. So this was 1997 or 8, right before the dot-com crash. And my group of undergraduate students actually won. We invested in Amazon and CMGI, all these internet tech companies that just went to the moon. I think we made 77% in about a 3-month period of time. So we all were like, oh yeah, we're the best. We all had these big egos. And they decided to start a student managed fund with real money. And they gave us like real donor money to invest for the university's endowment fund. And like any undergraduate student, let's do what we know. We put it in all risk. We didn't try to diversify. We didn't try to do anything smart about it or even research valuations. And we had a lot of groupthink. And you all know probably what happened. We might have still had Amazon, but it crashed like 90%. And we lost pretty much the whole fund's money. So then what happened was all these people started dropping off. So we had 5 people to start, and pretty soon it was just me. And they brought me to the board, the board for the University of Connecticut, and they're like, explain what you learned and all this and why you did what you did. And I had to be like, well, we lost 90% of your money, but we were only 1% of the total money. So, in terms of diversification, we didn't have that much of an impact. And I use that diversification story. And then I said, if we were to do it again, and what we recommend for future fund managers is that we learn the value of valuing companies, explaining why we're bullish about a strategy, diversify and try to find uncorrelated risks so that we don't embarrass ourselves by losing 90% of the fund's money. And these are really important lessons that I learned really early on that I would never had from that failure. So I always say learn from your failures. The second failure, sorry, Mom, but I asked my mom, can I manage your money, Mom? And she's like, no, Jeff, you're way too risky for me. I want to go with safe. I want to go with bonds and stocks, maybe the 60-40 portfolio. And I'm still working on my mom. But I've been doing a lot of research, and I didn't want to live that normal 60-40 portfolio because there's actually a whole other universe that's available to accredited investors and some investments for non-accredited investors as well that just have much better return profiles for the amount of risk.
That's great. That's a fascinating story.
That's how I got into it.
That's cool. So as an undergraduate, were you using real money or fake money?
So in the contest, it was fake money.
Yeah, that's what I figured.
And then when they actually lost it, it was real money.
Oh, no kidding. Wow, that is something. Yeah, that's a great story. It's the first time I heard you say that. Did that bring you to becoming an actuary? And tell everybody in the audience what an actuary is.
Unfortunately, so at that time, I wanted to have a career in investments, and the market was crashing. And so I went to work at ING, which was, it's not the beginning, it's an ending, or the other way around.
Huge company.
But yeah, so they were all about investments. So I thought this is my end into investments. But I started off as an actuary. My grandfather was an actuary. My sister started to become an actuary. She ended up becoming an accountant. And I just was always interested in managing risk and also kind of being a math nerd.
Yeah, can you unpack what being an actuary really is? Because I don't think our audience may know what that means.
An actuary is basically being like a nerd for an insurance company, figuring out what could happen, what could go wrong, trying to mitigate risk, and also, figuring out how much money to set aside for future claims or things that might happen that you don't know about yet. So it's basically like a quantitative person for an insurance company or a quantitative consultant.
Somebody that's brought into, if you're going to insure a CEO for $100 million, you got to figure out what the risks are in doing that. And so, you come in and you
yeah, so I'll give you an example. So when 9/11 happened, we didn't know how much we were going to have to pay out in claims.
Right.
So the first person they called up, Actuary, they're like, oh, and I was working at Aetna at the time, and they're like, well, can you estimate how much we might have to pay out because of this 9/11 event? And I was like, well, we have to come up with some assumptions. So we looked at like where our business was and how much of it was in New York, New York City. And then we looked at, okay, what kind of exposures do we have? So we have some health insurance, we have some life insurance. The health insurance isn't going to be very much, so it's really going to be the life insurance. Okay, now where are the people located? And fortunately, we had some risk management procedures in place where we knew exactly where all the companies were and where the employees were, and we were able to estimate within a fairly tight range what our potential losses were.
That's fascinating.
And then we had issues with, well, was it accidental or was it not accidental? And then that played into it. But basically, that number crunching, that's what I did.
That's a really valuable skill set to have. Really valuable for companies, for evaluating deal flow. I understand you're moving careers now. You're really working on maybe liquidating some of your assets in the real estate space to really go all in as a fund manager. Tell us how you got to that decision and why is that so powerful for you?
Yeah, thanks, Jerry. That's a great question. Yeah, so the reason why I'm liquidating my portfolio in real estate is, for one, anybody who's tried to manage their own real estate, it is not fun. Being a landlord is not fun. I've dealt with everything. Calls at 2 a.m. Fortunately, I put my phone on silence, but then, stuff leaks or all sorts of problems happen. Being a landlord, and then the returns. So rental yields, at least where I live, it's single digits. There's actually much better investments out there. As you get bigger and you can pool money, there's opportunities for much higher returns and returns that are passive and not active. And then a lot of these other investments that I found out about, kind of going into the fund manager space, a lot of them have really, really good tax advantages, bonus depreciation. We have the big, beautiful bill. I don't know what your politics are, but whether you like it or not, there's a lot of incentives to do certain investments.
Correct. Oil and gas is one.
Oil and gas, clean energy, bonus depreciation. Some people know about this short-term rental loophole. This is where, if you rent, if you take income from renting a rental or vacation property, that the average rental stay is less than a week, then you can basically write off anything that is not you can write off a huge portion of your investment.
Sure, absolutely.
And it's great for people who are in a high tax bracket.
Yes. Absolutely. No, this is great. And it's wonderful to see you here at Board of Advisors. I've been a member, as many of you know, for 8 years now, and it's changed my life. It's really like 10x'd everything I am today as a result of this community. Always knowing you have somebody to kind of fall back on if you need an answer or you need some advice about something or just consulting, or you want to potentially even hire, somebody that you can trust to do something for you. So tell me about your brand new experience at BA. This is your first time here. What's it been for you?
I think the best analogy I could give is if you think about like Luke Skywalker when he's in, where is he at? Tatooine?
Yeah, Tatooine.
And he hasn't met like his mentors yet, right? So like imagine like young Luke Skywalker going into this event and all these Jedi Knights around him, and he's like, and they're like, we'd love to help you, Luke. Like, right. And I was like, oh man, like these, and I don't know what I don't know yet, but I know that I have great ideas that I want to put into place. And I've just been connected to the right people at the right time.
Yeah.
And it's almost like there is like that force. It's like, okay, you need to go meet with this person now. They're going to teach you taxes. You're going to now meet with this person now. They're going to teach you marketing. Now we're going to meet with this person. They're going to teach you how to really connect with your customer and really identify what their needs are, because really what you needed to build has to solve a need.
Correct.
And then you have another person. And it's just, I've been going around and around, and every single person I meet is like a gold mine for me.
It really
is. Or a
is.
Bitcoin mine in some cases.
It's just like this incredible community of really high talent in niche markets. So
Yeah.
like if you need somebody to teach you AI or really understand how to make money with AI, you have that guy here, you know. You need somebody you have to understand how to invest in crypto or blockchain technologies. There's somebody here for that
Yep.
as well. And it's usually, you know, BA is usually attracting the highest level of people in these industries. So you're not working with like a mid-range, like in Hollywood, they would call you like a C actor or a B actor, but you really want to work with the A actors. Well, that's
Yeah.
what like BA is. BA is all about the
The
A
whole
actors.
team is like all top 1%ers or top 0.1%ers.
Yeah, which is a fascinating community and a place to really grow. You don't try not to get overwhelmed. I'll just give you my
Yeah.
advice. It's easy to get overwhelmed if you don't take it slow, but just take one thing at a time. But this is such a great time for you as a fund manager to move into the space. We have that in common. I saw the same vision for myself. I've been an entrepreneur for 30 years, and I've been building small businesses ever since. And I just felt like, you know, I'm a little older than you, Jeff, but at 59 years old, I wanted to become an allocator. I wanted to become somebody that can deploy capital, not only for my own ventures, and, you know, I don't necessarily need to be the CEO anymore. I could literally just fund the companies and then allow greater talent to come in and really build these things. And so I think we're on the same journey, and I know that there's partnerships that we're talking about right now. So I'm honored.
There is.
Really honored to meet with you and to have you here.
And I wanted to say some good things about you, Jerry. So Jerry is an amazing at finding like some of the best investment opportunities I've ever seen. So he showed me his portfolio. This is why we're joining forces, because we have a lot of potential things that we can do great together. But there's people who want to change the world. So these people who have great ideas or inventions, they want to change the world. They want to make the world better. They don't have the money to do it. Jerry has connections everywhere. He hosts events like, I don't know, every week it seems like.
Every month.
Every
every
month,
6 weeks. About
every
4 to
6
6 weeks we host an event.
So he can find people who, you know, want to have a great return that can help some of them are startups, some of them are a little further along than startups, but they have, you know, amazing opportunities for growth. And we're basically just, you know, we're finding people who have money, finding people who need money, putting them together and just making things happen.
Exactly. And, you know, a big part of that and why I'm so interested in working with you, Jeff, is because of your background with looking at deal flow. Like we outsource all of our due diligence at this point, and that's the first stage of due diligence is the outsource piece, and then it comes internally, and we do our own on top of what we've received. We do our own due diligence, and we make decisions, tough decisions, you know. And I learned this from an interview I watched with Tony Robbins, where even if something comes up that's not so good about the company or the opportunity or the founder, what I found out is having that conversation and really finding out the root of it or what their side of the story is, because you can do due diligence, you can do background checks, you can, you know, really go down that rabbit hole, and a lot of things could have been resolved and it may have not have showed up on the report, or there was some mistakes there, but there was learning there as well. And so I always look at the visionary entrepreneur or the visionary investor. I'm protecting the investor. That's our job as a fund manager, is to protect investors, right? And to make sure that the deal flow that they're coming in is good and that it's solid and that it's going to provide an estimated return for that person. You're never going to get it right. You're never going to get it exact, but we're going to do our best to do that. And due diligence is a huge process. And I'm outsourcing that currently at Legacy Capital, and having you come in and being that second set of risk mitigation is going to be very helpful for us. And so I look forward to an incredible partnership with you. And this has been so much fun. What's the last thing you want to share with the community watching this? Those who are outside of BA, those who are inside of BA, it doesn't matter. What do you have to say as far as advice around investing or looking at deals or making ROI?
I'll do advice around investing. So, you know, Warren Buffett is kind of I don't know what the word is. He's considered one of the best investors ever. I would say listen to what he says, but also listen to what he does. So he tells people, you know, invest in an index a lot, right? Especially if you don't know what you're doing. Get a portfolio, get diversification. One of the things that we're able to do with Legacy and with my stock alternatives is get access to a lot of different investments where you can diversify. And then, you know, if you think about a return, you know, most people when they're asked, would you rather have 50% chance of having a 10x return or a guaranteed 12%, right? A lot of people will say I'd rather have the guaranteed 12% than the 50% chance of a 10x. But if you take a 50% chance of 10x and you have like 10 of those, well, then the whole risk profile changes. It's no longer a 50% chance of a 10x. It might be like a 90% chance of a 5x or something like that, because the law of large numbers takes away that risk that's diversifiable.
That's right.
And that's where I really think that we can come up with some creative ideas on allowing people to have that diversification that Warren Buffett always talks about, and also to participate in the higher returns that you get from things like venture and private equity.
I love it. That was brilliant. Thank you so much, Jeff. Thank you for being here on the BA podcast. We're going to sign off now. Jerry Conti, Legacy Capital, and Jeff Stock.
Great
to meet you, man.
Thanks, Jerry.